Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with this whole structure to the upside in relation to the volume pattern that we have down here, because this is a typical impulsive volume pattern where the couple of 1-2s you have at the beginning lead to pretty much a horizontal volume structure. Then you have your wave 3 to the upside where you can see some high peaks, some volume increasing, and then we get into the 4-5, 4-5, 4-5 area where typically you like to see volume decreasing. Now, it's also common in an impulse that the nested 4-5 area is longer in time than the 1-2s because wave 4s tend to be longer in time compared to wave 2s. So it's absolutely normal that this structure is going to be bigger compared to this structure over here. But this is typically what you like to see in an impulsive structure. And if we then look at a structure that is going to end this impulse very soon, then we have to think about this ending diagonal over here. In this ending diagonal, all of the waves have to be zigzag family structures, so either an ABC to the upside or an ABC to the downside, or potentially double or triple zigzags. In this scenario, we're looking for a finished 4-wave structure and then looking for that 5-wave structure to the upside, where the invalidation for this wave 5 is price hitting this 1-to-1 at 40.4k, because a wave 5 is not allowed to be longer than wave 3 in a contracting diagonal. Now, the target area for wave C, where we're then looking for a simple zigzag in an ABC, is between the 1 and the 1.236, and that is where price is right now. This is your most common target area. Of course, you can always bid below as long as you don't hit the 1-to-1 over here. After this wave C, we then want to see a retracement to the downside, and if you get diagonals at the end of a structure, the retracement can be quite quick as well. So keeping an eye on a potential zigzag 535 to the downside if that is going to be the case. Obviously, there's going to be a lot of liquidity below all these lows, as well as undoubtedly people are upping their stop loss all the time. So once you are going to trigger a couple of stop losses, it might rain very quickly indeed. If we look at the low time frame more bullish scenario, then we're looking for continuation to the upside in an impulsive structure. So in this scenario, we have the whole impulse 1, 2, 1, 2, 1, 2, 3, 4, 4, 4, and then eventually we're looking for a bigger wave 5 to the upside, where after the bigger wave 5 at higher prices, then we're looking for a retracement to the downside. Now over here you can also see we have a couple of 1-2s on the chart. I'll zoom in a second, but 1, 2, 1, 2, 1, 2. Now typically this is something that I like to see at the beginning of a wave 3. So for example here, right, 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, that's how it goes. But for a wave 5, that's not really something that you see very often, because in an impulsive structure, usually one of the waves is the extended wave, and in this case that would be the wave 3. So the probabilities of a wave 5 that is going to be very extended as well is lower. But in this scenario, if we think about multiple 1-2s on the lower time frame here, 1, 2, 1, 2, 1, 2, 1, 2, then we have to think that we are going to get an explosive wave 3 to the upside for much higher prices. But at the moment, it just seems a little less likely. Now, also, if we look at this structure, this wave 2 retraced to the common golden pocket, so that's absolutely fine. This wave 2 retraced to the 0.5, so that is also fine. But then we have this one over here. And this one retraced to the 0.236, which is an incredibly rare target for a wave 2. The latest wave 2 that retraced to a 0.236 and ended in a bullish structure to the upside was in July. So that's all, like basically half a year ago, right? So this is very, very rare. Lowers the probabilities of this scenario as well. But if we look at this structure to the upside in combination with the volume as well, then what you see is that we constantly end this structure on high volume. This peak here had the highest volume of this move to the upside, and preferably in an impulse. If we think about impulsive continuation, 1, 2, 3, 4, 5, drop and continuation, usually wave 5 is going to end on lower volume compared to your wave 3. So as long as price is making higher highs on higher volume, preferably you're going to be thinking about wave 3s, looking for another 4 and then a 5 on lower volume, right? That is the ideal volume path for an impulse. However, also here we have now volume in the high and we already start ranging once again. If this is a wave 3 of 3 of 3, we don't want this shit, right? We want to see continuation. We want to see big volume, big candles, but it is also weekend. And starting a 3 of 3 of 3 in the weekend is also not something that you really like to see, which lowers the probabilities that this move up is really the beginning of a 3 of 3 of 3, right? So currently, as it stands here on the lower time frames, this isn't too great. And the fact that, again, the volume is in the high is something that we have to keep an eye on, because now we don't want price to dip too deep. Because if this is another one, right, you don't want to see price dipping actually now below the 0.618, because the highest volume is in this move. So if we think about a 3, we are looking for a 4 and a 5, but more about that here on the micro time frame. Because here locally, we are then looking for this range after price hit resistance. It hit the blue box over here, and to be more specific, it hit the daily that we were looking for yesterday during the live stream as well. And over here again, I write volume, right? The volume is in the highs, but that is important, because if I go to the 5-minute, you can see the highest amount of volume is in this candle. It's sitting in the high. So if we are looking at this sideways structure and then the highest volume move to the upside, preferably in an impulse, you're going to think about a wave 3, right? Because by far most commonly, a wave 3 has the highest amount of volume. So after a big candle with the highest amount of volume, you like to see shallow retracements, because you're going to be looking for 4, 5, 4, 5. But in this case, after price hit the daily, we got a sharp move to the downside that hit the 0.618. And the 0.618 is not a target for a wave 4, or I mean theoretically it's a target, but it is so incredibly rare that the 618 is a target for a wave 4 that for me this invalidates a wave 4. So therefore, if we are looking for upside, this again has to be a wave 2. This whole range has to be a 2, and you're going to continue to the upside in a bigger wave 3 early next week, hopefully, when the markets are then open. The invalidation would be for price to go below these lows over here, but this is just not really something that you like to see. And also this range here is starting to become quite lengthy as well, which is wave C-ish behavior. Now, when we look at this range here, price did touch the 886 twice, which is taken from the high to the low over here. After the 886 is hit, we always have to think about this high being a potential B or X, and the probabilities are generally higher after the 886 being touched for a move to the downside here to be a wave C or a wave Y, which therefore increases the probabilities to come back later to take the double top. And it would be nice to do so during the week when the markets are open, so they can grab the liquidity, potentially then to make a high and continue to the downside, or right, we just wait and see what happens. If they want to continue to the upside, we just continue to the upside. But currently on the lower time frame, right, we now have here a double top. The 886 is touched, so probability wise, probabilities are good to then take that double top at a given moment, but preferably when the markets are open. The only problem I have here is the 0.618 being touched, so probabilities of this being part of a wave 4 are not that great, which increases probabilities for the bearish structures. Now, if we look at CVD divergences, then yesterday at the beginning of the live stream, we were looking at this range, bullish CVD divergences, probabilities much higher for a move to the upside. We got the move to the upside, so that was very nice. And now more locally, we have both bullish and bearish CVD divergences. Of course, we are ranging at resistance as well, so we got to keep an eye on the bearish CVD divergences here for sure, where we have bearish CVD between the high and the lower highs that price is creating, and the target would be taking this low over here, right? If we touch this low again, then the probabilities just for the bullish scenario on the low time frame are going to decrease. We do have a little bit of bullish CVD divergence, so it's a bit of a mix more locally. So over here, what you can see, lower high on price, but look at blue, higher high on the CVD, yellow, higher high on the CVD as well. And then between this red candle, we have over here higher low in price and lower low on blue. Right, so that is something we have to pay attention to. Now, more locally here, there's not too much going on, almost some You do have some bullish CVD here, potentially, right? Higher low in price, lower low on the CVD, but that's very, very local. So generally, I like to give price a little bit of time to range. But if we look at the probabilities of the different scenarios here, then on the low time frame, currently the probabilities for the diagonal are increasing at the moment. So over here, we then have that diagonal structure. Couple of reasons. Of course, we are now at resistance, but also for a wave C. A wave C likes to end on high volume, right? Where your last structure is going to be the move with the highest amount of volume in the top. Instead of a wave 3, it's then a wave C. So that's definitely something I'm keeping my eye open for. And we are in the target area of a wave C as well. We've been ranging for a very long time. And if we look at the bullish scenario, a wave 2 touch on the 0.236 is incredibly rare. And here you ended this move on the highest volume, or if you would even move your wave 1 to the right here, right, then now this is the move with the highest volume. And it's not really like what you like to see in an impulse where you end the moves on high volume and then we go down for a potential wave 2. So even in an impulsive structure, preferably this is then your wave 3, but you don't want wave 4s to go too deep, but we did hit the 0.618. So it's not forming too nicely. In this range though, if we look at the range, we touch the 886, we have a double top, so potential to wick early next week when the markets are open to grab the liquidity, observe the reaction for potentially a swing failure pattern, or of course potential continuation. We have to wait and see. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.